through lots of information. We've got a pared down committee right now, so I'll be leaning on Michael and Jeannie to carry the motions, and there's only the three of us. We are working on building up some new members, and we'll probably get an update on that at the next board meeting. But for now, it's just the three of us and everybody else on the phone. We've got 4 or 5 approvals to go through today, and a number of the usual agenda items, including approval of the year-end financials. So I'll call the meeting to order, and everybody's seen the agenda. Can I get a motion to approve that agenda? Any comments?
I'll move it. Thanks,
Jeannie. Michael, second. Approved. Okay. So any declarations of conflicts by anyone?
No.
Okay. Okay, let's go to the consented agenda. All the key messages, I think we can take that as read, and we'll turn it over to Lisa to talk about the macro dashboard and where we're at.
Kevin, I might suggest, good morning, everyone. I might suggest maybe just looking at the minutes before going to the macro dashboard.
Yeah, let's draft. Okay. Yeah, let's. The minutes are there. I assume everyone's had a chance to read those, and we do have to have a motion to approve them.
I'll make the motion.
Thanks, Michael. Jeannie.
I'll second it.
Okay. Perfect. Minutes are approved. Now over to you, Lisa.
Great. Thanks very much, Kevin, and good morning, everyone. I know if you could just move to the next page. So the macro dashboard and your materials here reports on the overall health of 3 key areas of interest to the Farm Committee. The first is on our 2020-21 corporate plan performance. And we have now completed our fiscal year ending March 31st. And this reports back on how we performed against the board approved corporate plan for the last fiscal year. And this is covered in a lot of detail in our integrated annual report, which is item 6. So very briefly, what I'd just like to say here is that this year we've performed really well. We've actually met 70% or higher in all the 4 key areas or categories that we track specifically for the Farm Committee, being our budget, our capital investment plan, our revenues, our key deliverables, and our KPIs. And so what I'd say is, despite the yellow, this is actually the strongest result we've had in the last 3 years of tracking this way. And I might suggest going forward, we relook at perhaps the cutoff in terms of, what we would show as an orange or a yellow, which is currently anything that is below 80. Between 70 to 80 would be yellow, and above 80 would be green, and then below 70 would be red. So I just wanted to make that comment and observation, and we'll talk more about our performance under item 6.
Can I just jump in there?
Yeah, for sure.
That I know that we talked about that, and I know that consistent with the city's reporting, they treat 70% and better as green, and 60 to 70 as yellow. So we've somehow set ourselves a higher standard than the reporting of some of our constituents.
That's right.
Okay, so we'll have to consider that. Maybe management can come back to us with a proposal on that for the next Farm Committee meeting.
Yeah, we can do that, Kevin.
Okay.
The second pie chart on your screen is the finance and administration area that covers 4 categories: our financial reporting compliance, our internal audit, liquidity, and enterprise risk management. You'll see those areas are all green, and we do have some separate dashboards on each one of those areas, which I can briefly touch on shortly, so I won't go into further detail right now. And then on our capital projects, in terms of the health of our capital projects, 2 areas you'll see there remain yellow, being caution, and those are due to elevated cost or schedule risk. And David Cuthbert, our Chief Project Officer, will talk about these shortly. I know, do you want to move to the next? Unless there's any questions on this, we can talk about the high-level dashboards that support that macro dashboard next.
Keep going.
Okay, great. So this dashboard is our enterprise risk management dashboard, and the key change this quarter from last quarter is the inclusion of a separate risk on climate risk. And we felt that it was prudent to include this as a separate risk in our enterprise risk register, given our commitments to sustainability and resiliency as a corporation, it shows there as a high inherent risk, which is the risk in terms of the likelihood and also impact to the corporation in terms of climate-related risks. And then after our initiatives, we've rated it as a medium risk. So we've reduced the impact to the corporation as a result of our initiatives, such as the flood protection investments we're making and the minimum green building standards for developers. So I just wanted to bring that to your attention. But all the other risks on our risk register are consistent with prior quarters, and nothing is in the high residual risk, meaning after all the mitigation strategies we employ, we don't have anything in that high risk category.
Okay.
In terms of the audit dashboard, this shows the overall audits that have been either completed, are underway, or are planned over a 3-year time horizon, being prior fiscal year, current year, and the next fiscal year. And at this point, I would actually be happy to take this as read and invite Veronica Vila from MNP if she would like to make any comments about the status of our internal audit plan and outstanding audit recommendations. Veronica?
Yeah, sure.
And when we track
We presented at the last farm, we have the resource and succession planning review underway during this last period. As an update, we are well underway with this review. We've completed a full workshop with all the senior management team, as well as the majority of the interviews. So I think we have a few that are remaining for next week. So that stage will be done. And then going into June, we'll be developing a survey to assess the resourcing and succession planning. And then reporting will be done in most likely in the July month frame as we get the data that comes in from that survey and analysis of all the interviews and documents that we're gathering.
Great. Thanks, Veronica. And I guess the only other comment I'd make on the audit dashboard at this time is that there are actually 3 government-related audits that are either underway or upcoming. The first is the Tri-Government Strategic Review, which will be discussed later in the meeting. And for the Portlands Flood Protection Project, the federal government's currently undertaking an evaluation of its funding program, which does require a significant amount of time and materials for Waterfront Toronto staff to input into that. And then the federal government, on behalf of the 3 governments, is also planning to start an audit of the Portlands Flood Protection Project later in this fiscal year. So I just wanted the committee to be aware of that.
Was that one a surprise, Lisa? I can't remember that the Portland.
No, that one has been on our dashboard. We just have received confirmation of the timing that it would be this fiscal year, and we've asked if it could be later in the fiscal year than sooner. So hopefully that works out in terms of the timing.
Lisa, it's Jeannie here. Do we have, we know that audits are ongoing all the time, and you guys do an amazing job going above and beyond to accommodate, because they basically add work to your already full work schedule. Realistically, especially with Portland's flood protection, is there a need, or have you guys discussed additional resources just to manage that? Just because we're getting to such critical time with the project itself.
Yeah, and that's a great point, and it's timely that MNP are also doing the review on our HR resourcing. We're looking at overall organizationally in terms of our needs, and so that will be a factor, Jeannie, in terms of the audit. But as you point out, we're kind of used to, we've got a kind of a bit of a cadence with respect to audits, so we are used to them. But this will be some additional effort. So we'll look at that as part of the MNP review on our resources and staff up if we need to. George, did you want to add?
Yeah, no, I was just going to add to that, and it goes back to Veronica's point on the MNP review. One of the things we're trying to align is the strategic review by governments as to what they want us to do in the future, plus look at what our future needs will be in terms of skill sets and competencies. But what we're finding is we do have some pressure points right now, Jeannie, and I've been trying to hold off till we got that report. But we are going to have to staff up in certain pressure points that being one of them. IT, since we're working remotely, is another challenge, and there are a number of others that I'll speak to later on. But your point is well taken.
Great, thanks.
In terms of a liquidity and cash flow forecast perspective, on this slide, we provide a forecast of our cash balance for the next 5 years. And overall, you'll see a strong consolidated cash balance, which is that purple line, with no requirement to borrow externally for 3 years. That said, we do have individual projects that have cash flow timing differences where we need to spend in advance of realizing revenues. And we track these on the next slide, I know. And when we track these projects, we track the amounts that need to be funded on an interim basis, the interim funding sources that we use, and then the ultimate fund to be funded on an interim basis for projects. And in particular, because we do receive money from governments for specific projects, and sometimes we have unspent government funding in our bank accounts, we categorize any temporary use of unspent government funding versus unspent waterfront revenue funding as notional external borrowing. And this amount is currently at 20 million. So 20 million of unspent government funding that we're temporarily financing these projects. And we are expecting upward pressure on this to 60 or 70 million or so in the fourth quarter of this year. So that said, we're able to overall maintain a positive consolidated cash balance, but we do track this notional borrowing amount against our external government borrowing consent limit of 40 million. And we have made a formal request to governments in April to increase our borrowing consent to 90 as a result of this upward pressure. And we have also deferred certain costs to minimize what that internal borrowing balance would be. So our goal would be to secure an increase in our borrowing authority from governments sometime this fiscal year. And unless there are any questions, I'll turn it over to David to talk about the capital projects dashboards.
Okay. Any questions there? I would just jump in and say, great job, Lisa, to you and the finance team on everything, working remotely and everything that's going on. This is very succinct and great report. It makes our job on the audit committee easy with lots of greens and yellows and no red. So congratulations to you and your team.
Thank you, Kevin.
And David, I know you've got good news for us on a few fronts, including the N Bridge. So over to you and bring us up to date.
Thanks, Kevin. So we've got three dashboards this morning. First is the Portland's flood protection, and you'll hear this a few times today. We are continue to forecast that the project will complete on budget and on time, and currently there have been no scope changes to the project, with the exception of the third dashboard that I'll talk about and give some detail on the Lakeshore Boulevard work that we are about to kick off with the city. Current commitments on the project are in the $821 million range, which is about 70% of the overall project. So we've got about 30% still to buy. And costs incurred to date, $457 million, with the balance obviously over the next 3 years. Currently, we have about $46 million in contingency available to be allocated on the project, and we are tracking that on a real-time updated basis. And BTY will speak more to that.
Unspent government funding in our.
So we will assume you've read the report itself, and if there are any questions, let me know. Otherwise, we can move on to the East Bayfront Services Phase 2, which is there, Bayside External Services. So we have achieved substantial completion on the stormwater treatment facility. The anticipated cost of the overall project, 70 million, or about 71 million, which is just about 6.5% over the approved capital budget, but within the 10% authorization that the board provides when they provide capital approvals. The additional costs are primarily due to issues related to the concrete structure, and it is a very complex building, so there have been quite a number of design-related changes that we've had to accommodate. Having said that, the forecast covers the next 2 years while we operate the facility and prior to it being turned over to the City of Toronto, Toronto Water, to take full ownership and assumption of. And this will be our last report on this project, given we have achieved substantial performance.
Okay.
Okay, and then third project, now I said there have been no scope changes. This is a separate but associated project to the Portland's flood protection project. The city has authorized us to proceed with about $160 million worth of work, which are really three pieces of work: the demolition of the ramps from the Gardiner Expressway to Lakeshore Boulevard, the reconstruction of Lakeshore Boulevard from the Don Roadway to Carlaw, and then the reconstruction and widening of the Lakeshore Bridge, which we will do concurrently with lengthening the bridge, which is part of the Portlands project. Now, this project is funded solely by the City of Toronto, so it doesn't affect, we'll continue to report on the Portlands flood protection as a separate project with its $1.185 billion budget, and this project will report separately as well to the 160, which is being funded by the city. We are just completing the final negotiations on the delivery agreement, expect it to be signed within the next week, at which point we'll be in a position to start making commitments for the Lakeshore Boulevard project, which will commence in September. Currently commencing in September with the beginning of the demolition. Any questions on this one?
Which one is the Lakeshore? Just out of curiosity, the Lakeshore Bridge is it a new bridge, widening bridge? Which bridge is that we're talking about?
So if you look at the photo on the screen right now, the existing Lakeshore Bridge that crosses the Don Roadway, that crosses the Don River, is essentially 2 structural bays wide. We are doubling the length of that bridge in order to create additional hydraulic capacity for the river to flow underneath. So we'll be excavating underneath the 2 new sections of the bridge. We'll also be widening the bridge as part of the Gardiner work to allow for cyclists and pedestrians, because right now the bridge is not wide enough for anything but vehicles. So, and you can see right above the bridge is the Gardiner ramps, or are the Gardiner ramps that we'll be demolishing. So this is reconstructing essentially demolishing and reconstructing an existing bridge.
Okay.
David, I noticed on your top 5 risks, a lot of them look like they're kind of really out of our control because it's, the city's work on the Jarvis Sewer, the Gardiner Rehab Project, Enbridge. How are you feeling about those? Are you still feeling confident that they shouldn't be a problem?
We don't see there being any problems. We're coordinating very closely with the Gardiner team, and in fact, maybe doing some additional work for the Gardiner team, which is some sort of, we can call them emergency repairs on the Gardiner, in the same general area that we're working in. With respect to the Jarvis Sewer, City Council will be receiving a report and approving the traffic mitigation part of that project in June, so we're comfortable that the city and that is in control. So really not uncomfortable with the status of any of these, including Enbridge, which I'll provide some additional details on in camera.
Okay, great. And Lisa, cash flow wise, I know this is fully funded by the city, but cash flow wise, we don't expect any hiccups because, we're really tight just on our cash flow and, using other money to fund this and that. So you don't anticipate any problems there?
Not entirely. Having said that, this is a project that the city's indicated they're not in a position to fund us in advance on. So we're working with the city on a just-in-time funding strategy such that we wouldn't have to borrow in order to fund this project. So it appears that we've got a plan in place that won't compromise our liquidity position, but we are on top of this
Okay,
and
great.
monitoring it, Jeannie. But it's a great question.
Thank you.
Why in general did they turn it over to us to manage this project? What's the big picture there?
Big picture, Kevin, is that there are a number of components of the work that affect how we can do our Portland's flood protection work, and that part is the reconstruction of the bridge, or the extension of the Lakeshore Bridge. Because of the Gardner ramps overhead, we were limited to the equipment that we could get in to actually do the work. So it was going to be a fair bit more difficult for us to undertake the work. And given that the structure for the ramps is essentially in the same footprint as our new bridge, there's a fairly major health and safety risk associated with trying to underpin the Gardner, as you can imagine. And that's what we would have had to do. As we excavated the river, we would have had to underpin the Gardner bents, or the columns that support it, as we were excavating the work. So it was that was a primary reason. The second reason is that we need to extend the bridge, but there's not enough room to actually widen the bridge with the Gardner ramps in place, which means that the city would have had to come back in the future and rebuild the existing 2 bays of the structure and widen the 2 new bays that we were building, or are building, which would have greatly increased the amount of time that the whole area would have been under construction. So the traffic impacts would have been over about 6 or 7 years, as opposed to over about 2.5 years that we're going to be dealing with it. And of course, it would be much more expensive to do it in 2 phases, the way it would have had to been done. So those were the primary reasons for us, suggesting the city we look at this, and for the city ultimately approving it.
But David, if the question was, Kevin, why are we doing the work? It's partly because, we have the expertise, and as David said, the alignment to the work that we're doing already makes a lot of sense. So.
Anything else? So we'll be getting our Bayside reports will be replaced with these reports, I guess, from here on out. This is, how long a project is this, David?
Oh, Lakeshore Boulevard will actually go until towards the 3rd quarter of 2024. So it will actually take a little longer than the Portland's flood protection to get the Lakeshore Boulevard work completed.
Okay. Okay. Anything else from you at this point, or any further questions for David? Okay. Next on my agenda is the quarterly procurement exception report. Do we need to talk about that or highlight that in any way, Lisa, Kevin? Or?
I think it's fairly straightforward.
Yeah.
Given Newson's on the call, I don't know if you have
I assume Stantec and Clearway, obviously these are people we're already doing work with. So it's just logical to extend work to them.
Yeah, these are competitive procurements. They're just high dollar values. So
I see. Okay.
Yeah.
Okay. Thanks.
Disclosed.
Okay. And the regulatory compliance report is next. Any questions there, or anything that you think we need to have highlighted on the team, Ian or others? No?
Not for me.
No, health and safety and environmental are both tracking appropriately.
Okay. And the next on my agenda is the fundraising action plan. So, Ian, do you want to jump? I assume Ian, I haven't seen his name here, but are you there,
Yeah.
Ian?
Yeah, Ian's here. Yeah.
I'll just speak to this briefly, Chairman.
Okay, thank you.
There are 2 components to the fundraising action plan. One is the design of the 4 signature projects, and the most advanced of that is the destination playground. The other component is the preparation to launch a major fundraising campaign. Increasingly, we're beginning to separate these in our reporting mechanism. Essentially, we're on track. The the preparation for a fundraising campaign was begun by external consultants before my arrival in January. I've continued that work by and large according to the plan that was prepared before my arrival. I am going to be delivering a comprehensive fundraising campaign planning study next month in June internally, which will come to farm at the next farm meeting. That will reset the schedule and plans related to the fundraising action plan. Everything is essentially on track. No major issues to report at present. Our negotiations with the city about a fundraising memorandum of understanding actually clicked into action yesterday and are now looking much more positive than they were 2 days ago. So nothing substantial to report.
Okay.
And Kevin, I'll just add that MOU is extremely important. I'll touch on this later on for our ability to move forward on the fundraising. So that's a critical piece that Ian and I are working on.
Okay, how are you feeling about that, George?
Well, I'm feeling better, but I'll feel really good once we have it signed.
Let me leap to the defense of my boss. We're scheduled to brief him about it in detail tomorrow morning. And we've just got something back from the city yesterday. So he's not fully briefed on progress. But I think we're going to be fine. There are going to be some ambiguities remaining, but that's manageable. I think we'll get everything we need.
And I'll share how important this is a little later when we're in camera.
Okay.
Kevin, I just had a question for Ian. 2 questions. One, you talked about one of your actions is you're building the prospect pipeline. Have we set kind of criteria, target numbers? Would love to see us reach out and to kind of more diverse populations, I guess, than maybe the traditional group of philanthropists that are consulted. So just curious, I imagine that that's all set up, kind of all that, the criteria and everything.
Yes, I mean that identification of prospects is going very well, actually. If you can imagine, what we're trying to do is a pyramid of prospects, with the apex of the pyramid as those being best qualified and most likely to give. So at the very apex of the pyramid are people capable of giving very large gifts to our projects if they were so inclined, the sort of scale of giving that we've seen to major other Toronto institutions. So we've identified quite a significant number of those. Identifying new philanthropists, in other words, people who haven't shown themselves to be active yet, is much harder, of course, because there's no evidence to use to say Charlie or Sally is going to be the next big donor. But we have intelligence on that. So we have more than enough folks identified in our pipeline to keep us busy for the first 2 years of a campaign. And I can share that in detail.
Yeah, for sure. So that'll be part of what we report back to the board. But Jeannie, we've had great conversations with each of the chairs of our committees names, and both Wendy and Kevin have identified, there's a whole new group of wealth that is probably a lot more diverse. And we are on top of that, trying to identify those prospects.
Super.
Yeah,
I'll save my other question for when we're in camera.
Okay. This will be a component of the comprehensive report I deliver internally in June. That comes to farm in September.
Wonderful. Thanks, Ian.
Okay, some good progress being made there. Thanks, Ian. COVID. I know we're all dying to talk about COVID.
We don't talk about it enough every day. So just to update on the COVID-19 and impacts on projects, and then Lisa will talk about impacts on the corporation. Nothing new from a cost or schedule impact perspective on any of our projects since our last report. We've approved some costs associated with the COVID restrictions. All of our projects have continued and have not experienced any delay of any materiality, and they continue today. There has been some change, however, in the overall market. If we go to the next slide, or maybe 2 slides from now, that one, in the past quarter, and in fact the past 6 months, there have been substantial cost escalations and cost volatility in construction commodities, as well as in labor. And it's not all due to COVID, although being triggered to a degree by COVID. There's some larger issues in play, but particularly in lumber, steel, concrete, those costs have, I'd say, skyrocketed. And in fact, in some cases, well over 100% increases in those commodities. Now, these are components that we don't feature a lot of, fortunately, unlike a building that has a lot of steel in it and a lot of formwork and concrete. We have much less than that in the work that we're doing. However, there have been impacts that we've identified in some of the tendering results that we've received recently, and that's in the second bullet. We've seen some evidence of cost escalation. So I'm going to talk a bit more about this in detail when we do the Q1 cost forecast report a little later in the meeting. But we are tracking and assessing the market on a regular basis. And I would just note that in the last couple of weeks, we've seen some trends in commodity pricing where pricing in steel, copper, some of the metals has actually started to go down. So there've been 3 and 4% corrections in the last month. So that may start to point to some improvements in the market. Next. As I mentioned, no shutdowns affected our projects. We are continuing to operate under the city's rules with respect to outbreaks, and to date there have been no outbreaks on any of our projects. On the Portlands project, we've had 2 or 3 positive results, but they have not resulted in any impact to the project schedule or project continuing. We've talked about these numbers, they haven't changed. I would note that we have, and I'll mention this a little later, we have settled some of the numbers here, and I'll talk about that when we talk later in the meeting about risks in Canada. Lisa?
Thanks, David. So in terms of finance and accounting impacts, really the impact of COVID on our operations has been on our interim property portfolio, where we have some parking operations that have been adversely impacted. And you'll see that in some part it also talks about our financial statements next, where our net operating income from our property, we realized a loss. We had a decrease in revenue overall of $1 million this year for property, and particularly our parking operations. Having said that, there on the other side of that, we have seen some savings in our operating costs of up to $500,000 from reduced use of our office and office supplies, printing, travel, conference fees, those kinds of things, as well as moving to the virtual platform for our public and stakeholder consultation meetings. So overall, net impact of about $500,000 cost resulting from COVID from operations.
Oh, Kevin, you're muted.
Yep, so I just noticed that. Thank you. Any questions from anybody on the committee on those items?
Just a quick question, and I think I know the answer, but Waterfront Toronto is not eligible for any supplemental funding as a result of COVID, I don't think. And the second question is, have we received any lease payment or rental deferrals or any other landlord subsidies? Are we eligible for anything like that?
That's a great question, Michael. And we have investigated at length, and Marianne Santos is on this call, my colleague as well, the federal programs, and we are determined that we're not eligible, and the amounts would be not material even if we were to be eligible. From our Oxford property landlord point of view, we haven't received and
This project, given we have achieved substantial.
increase our rents. Having said that, our operating costs were decreased in terms of the building itself. So we did realize a little bit of savings here. That's a great question.
Okay, moving along, making good time here. The next item is the year-end financial statements, which I think requires our approval, and the BDO report. I'd certainly, as a matter of process, just like to have Lisa go through it and then hear the BDOs before we do the final approval of the financials. But we can take a lot of this as read. But over to you, Lisa.
Yeah, and if I might, Kevin, I'm going to invite Sampara Shandan, who's our Director of Financial Management and takes care of our financial statements and our external audit with BDO, to provide some highlights for our financial statements this year. Sampara?
Okay. Thank you, Lisa. Thank you, Kevin. Good morning, everybody. Today, I'm going to present the audited financial statements for the fiscal year ended March 31st, 2021. As usual, and these are draft because they're subject to the approval of the committee. As usual, I'd like to go through some of the key features or key components of the statement of financial activities and statement of financial position. I know if you could just flip to page 75 of the material, which takes us to the statement of financial position. I'm going to go through 3 or 4 key components to show the changes as well as the items that are significant over here. Cash of 104 million is, it's basically because of the working capital that we are required to maintain as a result of Portland's. You will see that this cash is slightly higher than what we maintained at March 31st, 2020. It's only because of the increased level of activity in the Portland's. And that also goes hand in hand with the amount of payables that we are carrying, accruals and payables that we're carrying at March 31st, 2021 compared to 2020. And you can see that component under the current liabilities section. The accounts payable and liabilities were 45 million as of March 2020, and they're about 68 million as of March 2021. So the cash really is in line with the increased level of activity. On the second item under the receivables, you'll notice that the receivables at 36 million have gone down compared to what they were at March 2020. Again, this receivables is completely a function of timing. At the time in March 2020, we had some outstanding receivables from the city for the Portlands, which we subsequently have realized, and we don't have any outstanding receivables from the city for the Portlands as of March 2021. The major components of the receivables at March 2021 of the 36 million is a claim for Portlands from the province, which is of 25 million. The province is doing their due diligence on the claim. This was submitted only at the end of March. They're doing their due diligence of the claim, and we expect to realize that amount shortly. Going to the restricted cash, which is note 5, we can see that the restricted cash has slightly increased. Now, this restricted cash is nothing but the amounts that Waterfront Toronto sets aside, some as a result of the agreements that require them to set aside this cash, and some as a result of internally imposed restrictions. Note 5 in the notes to financial statements details the components of this restricted cash, but basically these are all of the construction holdbacks and any of the developer contributions that we are holding for broadband as well as public art for when they become due. The next one is a key item, which is assets under development. You'll see that there's an increase of about 280 million from last year, and this is a significant amount of expenditures for the year. Of the 280 million, almost 244 million relates to the Portlands project. So that's a significant chunk of component of the assets or the expenditures this year. Under current liabilities, I've already gone through the accounts payable and accrued liabilities. Deferred contributions, you'll see that they have come down, implying therefore that we have relied on using up our deferred contributions, as a part of funding our expenditures. These are contributions from the past that we had not spent, which we have now subsequently spent, which you will actually see in greater detail in the statement of financial activities on the next page. I'd like to go through one last component on this particular statement of financial position, and which is a new item this fiscal year, which is related to the environmental and contaminated sites liability. We have created a provision for a remediation of contaminated site, which is basically our 7 Queens Quay, which is zoned as a park, which is not meant for development. So we've set up a provision of 2 million. The actual expenditures against this, the cash outlay will probably be somewhere around fiscal year 24-25, and you'll see an offsetting impact of this in the statement of financial activities, which I'm going to go into next. So if we can just go to page 76 of the material, the next page, and this is the statement of financial activities. Gross revenues have reduced from 266 million last year. They've been reduced to 227 million, and this is entirely as a result of the Portland's funding. Now, Portland's funding is really a function of the timing of expenditures. So we line these revenues in accordance with the expenditures we expect against these in this project, and most of this reduction of revenue is coming from the province, from the city. Last year, the revenues amounted to about 77 million for the Portlands from the city, whereas this year it's only about 40 million. So it's entirely from the city that these Portlands expenditures are causing the reduction in revenue. The next item is the expenses. And also, before I go into the expenses, you will actually notice under restricted revenues, the last line in that section, which shows the decrease in deferred contributions. Again, to my point that we have used deferred contributions to fund some of these expenditures that we have incurred during this year. Under the expenses, again, these expenses are nothing but the expenditures for the year, the 8.6 million. Now we make a distinction between what we show in our statement of financial position as expenditures or our assets under development, and these expenses. These expenses are primarily in the nature of planning, precinct level activities. Look at the components of these expenditures, 8.6 million. It mainly comprises of our signature projects. As Ian mentioned in his presentation, signature project mostly relates to the destination playground and the waterfront walk. In case of waterfront transit, the amount of the expenditures of 3 million relates to the Queens Quay LRT design transit. And some expenditures under complete communities basically they are nothing but projects that we have handed over in the past, but we continue to incur some expenditures on those, as well as for strategic initiatives. We have expenditures in the nature of design review panel, marine strategy implementation, and so on and so forth. So you'll notice that our expenditures, so our expenses in the financial activities have increased from about 4.5 million last year to 8.6 million. And it's only because of the signature projects which have advanced, as well as the waterfront transit project. As I mentioned in the statement of financial position, that we have created a provision for remediation of contaminated site 7 Queens Quay, and you can see the 2,075,900 being reflected over here as a corresponding expense. If we just go to the net operating income, you'll notice again, as Lisa mentioned in the COVID impact slide, that our net income from net operating income is basically affected due to parking operations as a result of the pandemic. We have realized about 1 million less in revenues this year as a result of the parking operations, and some of it is also as a result of our interest on our bank accounts, which again is linked to our prime rates and the Bank of Canada's prime lending rates, which have gone down this year. I'm just going to jump to note 12. I'll tell you the page in a moment. I know this is page number 84 of the material. I always like to go through this note in order to show the impact on unrestricted surplus. If you look at note 12B, you will notice that we have an unrestricted deficit of 24 million. This or 24.9 million. This is nothing but our retained earnings, which we have actually used to fund future expenditures. And this is going to be replenished at a point of time in Q4 21-22 or 21-22 when we realize the Quayside revenues on this. So this deficit is going to turn into positive. We're going to realize about 170 million of Quayside revenues later this year, which will result in this deficit turning into a surplus. I think I've gone through the key points, but if there are any questions, I'm willing to take them.
I did have one, Kevin, if I may.
Michael?
Yep. So I did notice, thank you for the presentation. I did notice the drop in parking revenue, which makes sense because less people going out and about. But the expenses stayed about the same. And I'm just curious if on a go forward basis, if we're projecting, for next or for this fiscal year, a reduction in the expenses to match expected decrease in parking revenue. That was one question I had.
Most of these expenses are of a fixed nature, but we'll certainly look into that, what comprises of those expenses and whether there's any possibility of looking at, in terms of reduction in those expenditures. I'm also hoping that the situation with parking will be much better this year, with things opening up. So we would probably be able to reverse some of these losses or decrease in revenue.
Yes, just to add to that, Michael, most of the expense relates to property taxes, which are fairly fixed. So, yeah.
Got it. Understood.
Thank you, Lisa. Yeah.
Okay. Thank you.
Michael, the only thing I'll add, and we can talk about this more in the HR and Governance Committee meeting coming up, but we had, because the austerity measures we took with regards to frozen salaries and we slowed down hiring, etc., you will find that we're well underspent in our salary budget. So we more than offset the $1 million loss in revenue through the savings on the salaries.
Understood. Thank you.
I had the same question actually as Michael on that. Expenses went up $600,000. I mean, I appreciate it's property taxes, but was it all property taxes? It just didn't seem to make sense to me. But anyway, thank you for the responses.
Sampato, correct me if I'm wrong, there's also provision for doubtful debts in that line, is there not?
There is, yes. We have provided for doubtful debts, almost like 900,000. So that's included. That's netted off that number.
Okay. If there's no further questions, I suggest that we go to BDO and then come back and approve the financial statements. Turn it over to BDO. Yes. Is that Jeff or who's on the line?
Yeah. Hi, Kevin. It's Jeff. Good morning, everyone.
Good morning.
Thank you for the time. So I'll take you through our audit report. High level, a couple comments on the audit. Went very smoothly. Information was received quickly and efficiently. All backup was provided. It was a clean audit opinion, which we'll get to in a second. And there were no concerns stemming from the audit, sort of at a very, 50,000 foot level. So if you can scroll one more page to the summary, I'll start there. So the current status of the audit is we are essentially substantially complete. We're waiting for a couple of legal confirmations to come back from those two law firms. You can see there, Bennett Jones and Borden Ladner. Obviously, the signed management representation letter, which we'll receive once the board has officially approved the statements, as it's dated for the date of the financial statements. Subsequent events review through to the financial statement approval date, and then obviously the board approval of the statements. You'll see in Appendix A, we've got a copy of our draft independent auditor's report. It was included in the financial statements that Sampato had in the package, but she did not go through it. It is a clean audit opinion. It's a standard audit report. It's got all the standard paragraphs, no modifications, no qualifications whatsoever. The scope of the audit work that was completed was substantially the same as what was described in the planning report to the Farm Committee back in February. The one sort of larger change I'll point out is in the materiality section. So on the top right of this page, you can see that materiality was originally communicated at 2.5 million. And that was based on the average expenditures for the past 5 years. Our final materiality was increased to 3.5 million, and that was based on the average expenditures for the past 3 years. The reason for the increase is if you look at the statement of financial activities, the amount of sort of cash spent on assets under development, it increased about 134%. So we matched our increase in materiality to be 135%. So staying in line with the activities of the organization to make sure that we weren't over or under auditing on behalf of the farm committee. So that was the reason for that increase. We've got our audit findings section, which we'll get to in a few pages. So I'll sort of skip over that for the moment. So if you can move to page 95 of the documents. So internal control matters, we're required to report to you in writing any significant deficiencies in internal control that we've identified. We did not identify any. We did a thorough review as part of the financial transaction streams, did not come up with any deficiencies to report to the committee. Independence, official letter is in Appendix B, but I can communicate to the committee that BDO Canada and all of our related entities are independent of Waterfront Toronto. And then unadjusted differences, there is a summary attached. I'm actually going to remove the unadjusted differences as a result of sort of some final changes that Sampath and I made to the statements over the last week. There was some amounts, the assets that were written off had originally been recorded as an expense. They're no longer recorded as an expense. They're directly through net assets, which is the correct treatment. So the unadjusted differences that you see in this letter are actually going to be removed. And then management representations. Obviously, every year we get a management representation letter, number of points in there around disclosures, access to information, disagreements with management, things that we ask management to sign off on to make sure that we've been provided unfettered access to all of the documents that we would require, and we were. And so we'll expect Lisa to sign that letter later on in the process. And then fraud discussion. We are actively responsive to fraud concerns. We're not doing a forensic audit, but during the scope of our audit, we are doing testing around, journal entries, controls that might be outside the normal scope of what a transaction stream would expect, making sure that nothing could occur outside the control process. And there's no fraud indicators that we came across, and no detection of fraud that we need to report. If anyone in the committee is aware of anything at this point that you think that I need to be aware of before signing the independent auditor's report, I would ask that either be notified now or reach out to me subsequent to the meeting, and we'll address it. You can move to the next page, please. So audit findings. So a number of areas of sort of significant risk of material misstatement. So these are things that we identify as areas of additional audit focus above and beyond the sort of the standard audit practice. So the first two, management override of controls and revenue recognition, those are standard risks in any audit that BDO completes. So obviously management override of controls is an issue. Certain people in management might have additional access over and above the control structure set up. So that goes back to some of the testing that I talked about. We do testing around journal entries posted outside the normal transaction streams. We look at unpredictability testing, so testing in areas that management might not expect us to test on, testing in areas where the dollar values are below materiality. I mean, the whole audit's based on materiality and number of thresholds for various different levels of testing, but we actually go below the required sort of CPA Canada standards to make sure that, someone's not trying to post an entry in the system that just might not be picked up because it's only, $10,000 in an area where we normally don't look at. So, and that unpredictability testing changes from year to year. It's never the same. So it truly is unpredictable in terms of management being able to recognize what we're going to go and test there. Revenue recognition, obviously with the amount of funding coming into the organization and the ongoing projects and the length of some of those projects, whether the revenue should be recognized, whether it should be capitalized into assets under development, whether it should be deferred. That's a critical, important piece of the financial statement. So it's an area of focus from us as well. Accrued liabilities, similar to previous years, given the sort of the nature of the operations being, construction-based or management of construction.
We've got a plan in place that won't.
Costs are accrued in the appropriate period, and the accrued liabilities are set up for that. It sort of goes hand in hand with the revenue recognition. We want to make sure if the revenue is being recorded, that the appropriate expenses are being recorded as well. You can scroll it. Thank you. Assets under development. Sampath kind of touched on that, but obviously it's the most significant asset on the balance sheet. So, we do a thorough review, thorough detailed analysis and vouching and testing of all the costs that are capitalized under assets under development. Construction deposits, Sampath also sort of touched on that going through the financial statements. Obviously, there's a number of construction deposits paid on behalf of the organization. Those sort of sit in between deposits and restricted cash for certain items. We just make sure that the allocation between those two categories is correct and that we've got the correct deposits on the balance sheet that they're true deposits. Again, a cutoff item, if it's deposited in year 1, perhaps it's been used up in year 2 and it should no longer be deposited. So we make sure that testing's done around both the payment of the deposit and then the use of the deposit. Contribution agreements, I think this is a standard item in our letter every single year. So, we do review in detail any new contribution agreements. We sort of keep a library of all the contribution agreements over the years with all the key factors and details. So any new contribution agreements are reviewed to make sure that we understand the nature of them and how it would affect the audit. Deferral of contributions, again, that goes sort of hand in hand with the revenue recognition, making sure that any contributions that should be deferred to a future period are correctly recorded that way. And then obviously for last year and this year, COVID-19, making sure we assess the impact of COVID-19 on the organization and on the results in the financial statements. A bunch of additional information was gathered this year. Additional questionnaires were completed by my team and also in conjunction with Lisa Sabata and their team in terms of documenting that and making sure that there was a need for a COVID note, which there's obviously a standard COVID note in the financial statements, but if there was a need for something more in depth, that it would be documented in the financial statements. But we're quite comfortable with the disclosure that management's put into the financial statements around COVID-19. We can move to the next page. Thank you. So internal control matters, I kind of already touched on that, but a bit more information there about internal control matters. Again, just a reminder, no control deficiencies were noted. You can go to page 99. Thank you. Other required communication. So as part of the CPA Canada standards, there are a number of things that I haven't gone over that were required to communicate as part of the audit process. To those charged with governance in terms of your role in approving the financial statements to the board. These are a number of those items. So, you can sort of quickly scan down there and see, it says.
Why in general did they turn it over to us?
So nothing on that page to report other than that is an important piece for the committee to look at before approving the statements. I think the next pages are the appendices. We don't need to go through those, I don't think. The draft independent auditors reports in your package, I assume you've all seen it and reviewed it within the financial statements. The next letter is the independence letter, standard independence letter. It's signed and dated. If there's an issue with independence between today's date and the board meeting, which I believe is June 23rd or 24th, I will communicate that to Kevin, to you. You can scroll to the next page, but as I mentioned, the unadjusted differences that are, sorry, one more page, the unadjusted differences that appear here, I'm going to remove those from our final representation letter that we asked management to sign because of some of the final changes over the last week. And then Appendix D is just an example of the representation letter in case you're curious as to what we're asking management to represent to. And then Appendix E is just some BDO resource information. So happy to take any questions on the letter or on the audit process.
Okay, thanks, Jeff. Any project? What's the big picture there? To Jeff?
I think Michael has his hand.
Okay, Michael.
Yeah, thanks, Jeff. Just one question on the materiality threshold increase. Can you give us a sense of the number of transactions that would exclude as a result of going from 2.5 to 3.5 million?
I'll be honest, I can't give you an exact number of transactions it would exclude. It would exclude a similar number of transactions as in previous years. So one of our goals is to keep materiality consistent based on the operations of the organization. So for example, that was based on, really it's a focus on the amount of transactions occurring that are being spent on assets under development. And I can give you some context. So the CPA Canada sort of range for percentage of expenditures is between 0 and 3%, and we were only using 2%. So, the actual materiality under CPA Canada standards could be much higher, but, in my comfort level and in what I believe that you guys as a committee would like to see would be something consistent with previous years, even though it is an increase, it's not an actual, percentage-wise increase, I guess is what I'm trying to say. So we could have gone up higher on the overall materiality. There's also a concept of performance materiality, which is we take that $3.5 million, we apply a percentage to it. That percentage can be between 50 and 90%, and that's actually our threshold for testing. And instead of going to 90%, which we probably had, the rationale to do given, the quality of controls at the organization, we stayed at 75%. Again, not wanting to skyrocket materiality, even though I was increasing it. But I apologize, I can't give you an exact number of transactions, but I can tell you it's consistent to the level of assurance you got in previous years.
Yeah, thanks. I appreciate it might be a bit of a trick question, but I don't know if anyone on management can weigh in on kind of what the universe of transactions would look like as a result of that. It'd be good for us to kind of get a sense, if possible.
Lisa, is there anything that we could share now, or we can just bring it back prior to the board meeting?
Yeah, I think it's better to bring it back prior to the board meeting, George, so that we can have some time to get the appropriate information.
Yeah, sounds good.
Thank you.
Okay, anything else arising? Well, thanks. Thanks again to BDO for your work. I'm glad we have a nice clean audit to review, and appreciate your efforts.
Thank you.
I guess
Kevin, I've just make mention in the closed section, there will be an opportunity to have an in-camera with BDO without management to discuss the statements.
Right. Okay. Perfect. So with that, I'm going to ask for a motion to approve the March 31st, 2020 year-end financial statements.
I'll move it.
Thanks, Jeannie. Michael, second. All in favor? Okay, carried. Thanks, and thanks again to everyone involved for these difficult times getting through the audit and year-end financials. It's always a lot of work, and I can anticipate even more so this year. So great job, everyone. Next agenda, and I see we are a little bit behind, but we're moving along. Next item is the approval of the integrated annual report. I would start out by saying I thought it was an excellent document this year, particularly for members of the public who take the time to read it. Will certainly be answered questions about what Waterfront Toronto is doing and why and how. So I thought not only was it a great information document, but it's very explanatory of what we're doing and delivering on our mandate. So I was really pleased. I don't know how the other committee members felt, but I wanted to make those comments and turn it over to, I guess, Lisa for discussion on this item.
Thanks, Kevin. And I will just make a few very brief highlights before I open it up for questions, because I know we are behind a little bit. So this, as you mentioned, is our second integrated annual report, where we combine our environmental, social, and financial results into one integrated report. The theme of the report is connecting the waterfront this year, and that emphasizes our revitalization approach, how it supports many forms of connections that characterize thriving cities, including physical, social, economic, and intangible. And some notable I guess, enhancements that we made from last year, our first integrated report this year, was that building on our reporting for impact approach, we've really tried to bring in stronger linkages to ESG, environmental, social, and governance reporting, which
of the bridge, or the
highlighted and raised the last couple of meetings, as well as between our own KPI indicators, as well as the United Nations Global Sustainable Development Goals, as well as the Global Reporting Index, GRI. So we're really leaning on the leading practices globally in this report, and that is reflected in the document that you see today. Just in terms of other highlights, the financial sections, I mentioned earlier under the macro dashboard, our financial results are very good this year. We achieved 73% of our capital investment plan, which is the highest result we've achieved in the last 3 years, and 75% of our capital funding plan, which in terms of capital investment, it's almost 300 million out of a 393 million budget, most of which is for the Portlands project. In addition, and as George has mentioned, we came in under budget by 2.5 million in our corporate operating budget. This is our budget for our HR and our office, which is about 20 million. And we came in under budget, largely due to lower HR costs from the austerity measures, as well as the savings in our office and public engagement due to the pandemic. So that's something that's a good news story. And then finally, in our integrated annual report, we do also include a reconciliation of the numbers that we present in the report to our audited financial statements, and that's in Appendix 2. So with that, I'd like to, and before I turn it over for questions, George, did you want to make any comments about the report this year?
No, you know what, I would just share, and I would echo Kevin's comments. I think, Lisa, Cameron, and the team have done a fantastic job. I get a lot of phone calls from other agencies and from ministers, actually Minister McKenna and others, who actually have passed our report on to others along with our 5-year plan as examples of excellent work. So I just want to thank the team for all the great work that they've done on this report.
Okay, any questions there, Michael or Jeannie?
Just a comment.
Lisa just had a couple of comments. One, great work, excellent report, very user friendly, a lot of great numbers in there. My only question is, and I think it might be helpful if we put a map that shows kind of what is our mandate area with kind of recognizable landmarks like where the CN Tower is and where the Sky Dome is and stuff, because I think we kind of take it for granted that people know what Waterfront Toronto or like what area we govern. So I don't know if that's something that could be considered.
Yeah, we
Sorry,
can definitely
throw a
consider
wrench
that.
in your plans, but
No worries. We have had maps in the past, Jeannie. So we'll take that back and see what we can do, whether that's possible.
Great, thanks.
Jeannie, I would just share though, as I'm working with the city manager and we're looking at the strategic plan going forward, there is an interest in showing a broader geography because, we're working with the Brickworks Evergreen on, the tributaries coming in, et cetera. So I would show the designated area, but I should also caution, we should probably talk broader in terms of the interest of the city and others to look at a broader geography.
Great, thank you.
Michael?
Yeah, thank you. I was just going to echo Jeannie's comments. I think it's a visually a great report, lots of great content. One question I had was, do we have a sense of how many views digitally we get on the report? Like, what's the, I guess the audience size? Just I don't know if we track that in any way. Just curious.
Cameron?
No, I don't have that at the ready, Michael. As you know, we're doing a web rebuild. We're kind of limited functionally in terms of what we can, what kind of data we can draw from page views. I'll certainly look into it. And as to build on that, we will roll this out. The next step is goes to the board for approval on at the next board meeting. It's got to be proofed, and we will roll it out in July with a social media campaign around it. So normally we have sort of 4 weeks of social where we'll take each chapter and we'll make it really digestible, and we'll drive people to other evergreen content we have on that topic area. So we try and drive people to the report, but as Kevin noted, it's a fairly long report because it does integrate our CSR and our financials. So to get a kind of comprehensive view of how many people are kind of touching it would be actually a helpful thing for us to do. And I think we could do that with the next iteration of the website, plus the analytics we have from social. So if we put something up on Twitter and people read it and they go to a blog, that's really where we're going to be really happy in terms of the content performing. So I don't have the analytics right now. I'll see if I can get them in terms of how it's performed in the past. This is again the second year of the integrated report. So it'll be interesting year over year. And then I think going forward, I think we're going to have much better analytics with the new web platform, with the new website platform.
So Michael, after, as Cameron said, it'll be launched in July. So probably when we get to the end of the year, when we have another board meeting, we'll be able to give you statistics that would support the question.
Okay, great. Thanks so much.
We also do, Michael, a limited print run and send it to sort of super stakeholders and others. Usually about 150 or so, and send those out.
Cameron, just a quick question to add on to Michael's point. Do we target or have an email list of media or whomever that we send the digital links to?
We send it through our newsletter, which is over 7,000 as an e-blast, and we do put up a note usually in our newsroom. We don't have an attended media release that says it's the annual report is out. But we do have journalists who are on that distribution list who will read it and often will comment and use it as a resource. So it does reach those audiences, yes.
Is there any benefit to doing a media or press release? Just thinking of what Ian and his team are doing in terms of, they'll be going out to do the fundraising campaign. So maybe this is good, kind of planting the seeds. And if you do a press release, I don't know if that gets you more coverage.
I'd have to investigate. It hasn't certainly been our practice. I'd have to look around at what other.
There's a fairly.
I'm not. Just haven't thought about it. It's interesting.
I just wonder if it would help Ian, right? So when they go out, people will be like, "Oh yeah, Waterfront in Toronto. I saw your whatever report last year." Just to maybe, like I said, reach that broader audience.
Yeah, Jeannie, to your point, and Kevin raised this earlier, it is a great document to tell the story, right? Like it was written in a way that is about storytelling as opposed to just reporting financial and KPIs, right? So we should try to utilize that, whether it's through the social media campaign or through a release. So we'll take a look at that.
Yeah, I might even suggest that, Cameron, to your point about sending out some hard copies, to utilize the board a little bit to do the same, to even if we got it out to 10 or 12 of our contacts each. We're always facing this, this frustration about the pace of things happening on the waterfront, and why aren't you guys doing anything? And this clearly answers the question that we're doing a lot. And as Jeannie pointed out, I think it'll become an important document for Ian as well.
All right, so
Okay.
Kevin, we'll take a look. I do think, sharing and in particular to Jeannie's point, as we do fundraising, having that document physically in people's hands. I don't know, I'm probably still old school. I like to see the document, flip the pages. So having both vehicles available to us, I think is probably the right thing to do.
Okay. I think we do need to, good dialogue. I think we do need to approve the, how does this work from a governance? We approve it and then recommend the approval to the overall board?
Yes.
You are just recommending for approval by the board.
Okay. Then I will ask for that motion.
I'll move it, Kevin.
Okay, Michael second.
Seconded.
Okay, carried. Again.
And I assume Lisa and team, if we go through and, find a little something, we can just flip you an email.
Yeah, and if you can do that by the end of day next Wednesday, that would be really great.
By next Wednesday. Perfect. Thank you.
Okay, we have some work to do on Quayside to get it ready. I showed Julian as that item. Is that correct?
Julius?
Correct.
Okay, Julian, welcome.
Good morning. I'm assuming that all have read what we're looking to get accomplished today. So I'm going to go through the deck first, and then we'll come back to the motion, if that's okay.
Yep.
So let's go to the next slide, please. So we're looking for $14.2 million to complete 60% design on the Quayside public realm and infrastructure work. This is enabling infrastructure for the Quayside development to move forward and has a material impact on land value as seen by the developers that potentially could be buying the site. We'll go through that in a bit of detail here. As part of this, we'd be hiring design consultants, and we would also be hiring a construction manager to provide input on constructability and cost, and then move forward with implementation subject to achieving our benchmarks relative to financial targets. Next. Overall, Quayside we're familiar with, so I'm going to show a bit of detail in the next couple of slides as to how this all works. But basically, we are providing the infrastructure required to let this happen. Next. This is an overview, simple outline of the area impacted. So within these boundaries, we'll provide servicing, roadworks, public realm. To complete these areas, we'll work through the sequencing of delivery, looking at conditions that need to be addressed through construction, make sure that we're not wasting time and redoing work. So we'll sequence based on working with developers as well to the final delivery of some of the public realm in these areas. This next slide shows the basic scope of work by element. So we've identified the various roads, we've identified public space, Silo Park, and we have to integrate with the Queens Quay design team that's already underway. We've taken this into account as we're working through the budgets to develop this program. So Queens Quay is funded to 30%. We will look to complete that to 100% concurrent with the balance of this work, and we'll look to recover design costs for Queens Quay from the city ultimately through development charges. So we'll continue to pursue them. Next. This is the overall budget for the program at $209.79 million. We've broken it down our usual way in terms of completing due diligence. That's where these numbers have come from. We also completed a risk assessment to determine contingents. These are included in here along with soft costs to cover both external and internal costs. The following few images just show some of the work involved. So at the top on the right, we see Parliament Plaza and some of Queens Quay and a bit of Silo Park. At the lower, we see the Water's Edge Promenade, and it gives you some idea of what we're dealing with in the ground, dealing with dock walls and the public realm treatment above that, which is consistent with the balance of our waterfront promenade generally. Next. And through due diligence, we've gone through a fair bit of detail going through location of services, how those services would be put in place, what the public realm treatment would be. So we'll refine those and test those numbers. Next. This is a simple transit overview with major and minor roads. Next. This one's a bit more interesting. We've set this up in a manner from a water, power, sewage, stormwater management standpoint on an isolated basis. So we are not dependent on adjoining developers to proceed with work. Everything is fed generally back up to Lakeshore Road. We may find some savings should Dream and others start to move forward with their programs, but this allows us to wrap up Quayside in isolation if need be, and we've budgeted accordingly. Next. So to move forward with this, we've looked at the work actually being funded under Queens Quay, taken that into account, and then put a budget together for 30 and 60% design, carrying an allowance for a construction manager identified at $250,000 plus $250,000. And then we've added our project management fees, taxes, leading up to the 14.2 total identified. Next. So as I open this up, it's 14.2 million for the 60% design that we are looking for. We look to complete this work around mid 2022. We'll look to see what we can do from a funding standpoint, and we will look to recover money from the city if possible. We'll be coming back for further funding approvals as the project proceeds. So we will be back to seek funding for the balance of the implementation work at the 60% stage. Next. We've assessed risks. These are normal risks we think for this type of program. So we do have to go through a procurement process. That always has its challenges as we run through, just making sure that we stay to our timelines. We've made assumptions in regard to what the cost will be for fees. We'll see what actually comes through with the market and use the baffle process to get this contained as best we can within the budgets that we have. Consultant capacity we touched on. Big issue here will be city engagement because all this work will require complex approvals, particularly from city water and environmental approvals, at least in concept. So we have to go through that engagement and carefully integrate a balancing act between the ongoing Queens Quay work and the balance of the work around. And then securing construction schedules, again, looking at regulatory process. So these are normal risks that we manage every day. We'll advise if any further challenges come up. Next. Timeline for the overall program. This shows the broader delivery out of the due diligence report. So we look to have our designs done by the end of 2022. We look to get into construction in 2022 and complete the program by mid-2026, but that is beyond the scope of this approval. So right now, we're looking for those initial engagements to firm up pricing and get to that 60% point. Next. We will be securing or soliciting the market through BAFO process, both for design and for the construction manager. Again, taking into account the Queen's Quay work that's already underway. So we will work with that team to look at the expanded contract, which is built into that procurement already, the Queen's Quay design. Next. So our capital approval request in summary is for work to be completed between September and August 31st, 2022. We would complete procurement for the 60% design and then subject to positive results, seek further approval. We will retain a construction manager to provide feedback on schedule, constructability, and budget input and schedule input as a broader team, very much the way that we're pursuing the PLFP program. Next. And this is the resolution that we are looking for. Any questions?
So just to be clear on this, Julius, this will be the first of many, obviously, of these. This is entirely contemplated in the 5-year strategic plan. There's no surprises in terms of these costs, and lastly, nothing changed in this as a result of our subsequent purchase of the Parliament slip. This is all anticipated work?
Yes, no impacts.
Okay. Any questions there from the committee?
Julian, it's Jeannie here. Hi.
Hi.
So I assume that obviously this is pretty urgent because we don't want to award Quayside to a developer and have them say to us, "Oh, well, you guys are behind on your infrastructure." So, you know,
correct.
It's an excuse. Now, worst case scenario, if and when there are delays, is the plan set up so that, you know, at least with the phasing, the anticipated phasing of Quayside, that, you know, phase 1 and 2, for example, could still move forward even if there's a delay to the final completion date of this project?
Yes, phase 1 and 2 could effectively move forward now.
Okay.
We do have to provide some supporting services, but generally speaking, those are good to go. So that allows us to move forward with a developer and provides us adequate time to finish up the work to support 3, 4, and 5.
Okay, great.
And Jeannie, Meg and I actually just yesterday talked about the various scenarios and making sure we plan for them. So
great, thank you.
And as Julia said, 1 and 2 are almost serviced now, so it mitigates the risk.
So no excuse. All right.
No excuses.
Okay.
I just had a quick question as well, Kevin. Sorry,
Mike.
Julius, just on this this funding. Do we have an approved list of suppliers for this design work? And yeah, how does that bidding process work? Just curious.
So we go through a best and final offer process. So it basically comes down to a pre-qualification process. We are a public agency, so we do go out to the broad market. Then we narrow that down based on the performance and capability of the firms that are responding to a short list. And then we go back out to the market based on qualified companies that can actually do the work, having experience doing this type of work, having experience dealing with environmental and municipal works that are complicated like this, and then ask them to formally price it. And then we secure that contract and engage them. So it's a cautious process, the one that we follow regularly at Waterfront.
And given the strategic, I guess, options we have in that area and Quayside, is part of the analysis, or maybe it's not relevant, I'm just curious, part of that analysis whether or not these parties have done work for any potential bidders or other, you know, strategic partners in that area? Is that part of the analysis? And how do we deal with, I guess, confidentiality, if it's a concern at all? I'm just curious.
The way we've structured this, firms that are part of a proponent team cannot do this work. So we're keeping a firewall separating bidding firms from proponents.
Okay. Okay.
Keep in mind, this is civil infrastructure. So we expect to have some depth in the respondents because they won't necessarily be doing the vertical development work that the bidders will be pursuing.
Got it. Thank you.
There's the motion on the screen. Can I get someone to move that?
I'm happy to move.
Okay, second, Jeannie?
Yeah, seconded.
Okay, carried.
Thank you.
Thanks very much. Good luck with the work.
Spend the money wisely.
Yeah.
We will.
Next, we're going to amend our 5-year strategic plan, another approval required. This is simply, as I understand it, to add the Parliament slip, which, but I'll turn that, who's running this?
It'll be Peanut.
Okay.
Good morning, everyone. I will, like Julius, take the presentation as read, but provide the committee with a brief walkthrough of the highlights and then take any questions. So as per the corporation's delegation of authority, projects less than 5 million in value are approved through our rolling 5-year strategic plan. Today's presentation is seeking Farm Committee's recommendation to take to the board for approval an in-year amendment to the Waterfront Toronto rolling 5-year strategic plan for 2021-22 to add the Parliament Slip Activation Project 60% design phase at a value of $4.7 million. Once completed, the 60% design would form the basis for capital approval at the 60% stage gate for the remainder of the design and construction. Next slide. As you're aware, in March of 2021, Waterfront Toronto announced a proposal to transform Parliament Slip into a world-class destination with exciting activation opportunities. In April of 2021, WT staff submitted a funding request to the provincial and federal governments, which included a comprehensive feasibility study and business case. And this request is currently under review by those two levels of government. Next slide. While not part of our 5-year rolling strategic plan, this project is seen as a critical element to activating the waterfront and our exciting vision for the Quayside precinct. And given its adjacency to Quayside, which you can see here in the map, completing this in parallel with the work that Julius just walked through enables us to achieve some efficiencies and cost savings. Next slide. To summarize the program for Parliament Slip, it will include 2 harbor swimming pools with the facilities building surrounded by a large wooden wave deck like the ones completed to the west at Simcoe, Reese, and Spadina Slips, a large wooden amphitheater for viewing performances, fireworks, or other activities within the harbor, such as the boats moving around within Parliament Slip, a canoe and kayak launch with opportunities for kayak rentals and on-site storage, a new floating dock with concessions and a full-service restaurant at the tip of the dock, and a fixed pier, which will provide an opportunity for a mobility hub where water taxis and a potential future water shuttle might be consolidated. The total project budget is, as we determined through our feasibility study, is $95 million. This is inclusive of the purchase of the slip, construction, design costs, as well as all other soft costs, project management costs, contingencies, escalation tax, pretty much everything. Next slide. This chart summarizes the expected costs associated with completing both the 30% design and the 60% design. Staff would recommend that we commence with the 30% design upon approval by the Board of Directors, but only proceed to 60% design upon confirmation that the additional funding has been achieved for the full project. Next slide. The Parliament Slip scope is reflected, or is proposed to be reflected in the rolling 5-year strategic plan under the Next Generation Sustainable Communities Priority Initiatives category. The total 5-year spending for this initiative will remain unchanged. However, we're proposing to
reallocate spending to advance an additional 4.2 million to the 2021-22 year from the 2022-2023 year, as you can see on this table. Next slide. This funding would be funded from Quayside land revenues. However, as the land revenues are not yet realized and won't be realized until later in 2022, short-term, interim sources of finance will come from WT's cash reserves. Next slide. As part of the feasibility study we completed to support the funding request to governments, Waterfront Toronto completed a risk assessment with the help of HDR. On the initial concept design, we identified several design-specific risks, which are outlined in this presentation, and staff would work to ensure early planning to mitigate these risks. One example is the risk that there are technical issues associated with wave action and floodwaters coming from the Keating Channel that may result in modifications to the design. And we would propose, for example, as part of this initial 30% design, to retain a water resources engineer as part of the design team to undertake early desktop modeling to help us determine what the risks are, so that we're not designing something that ultimately needs to be mitigated later on and will cost more later on. Next slide. From a timing perspective, we're anticipated to complete the 30% design later in 2021 and the 60% design in April of 2022. We're proposing to complete the full project if everything moves smoothly by summer of 2025. Next slide. From a procurement perspective, we're proposing that the design would be completed by the consultants who had led the design of the 3 other wave decks, the Water's Edge Promenade and Queen's Quay, which was competitively bid as a design competition. Staff is proposing that the scope be included in the RFP that Julius just spoke to for construction manager for Quayside as a separate price and be released in phases so that the CM construction manager can be engaged early in the pre-construction phases so that we can capitalize on their expertise early in the design phase. Next slide. So in summary, WT staff are looking for approval to add Parliament slip to the rolling 5-year strategic plan to complete the 60% design. If approved, staff will not proceed past 30% design until such time that full project funding is secured from the levels of government. And here is the motion. Any questions?
It's Jeannie here. Just one question. You talked about one of the risks is that the water and wave action, and that you're going to mitigate it by doing whatever water modeling. And are we going to reach out to the people who helped us with the Portland's flood protection? Didn't we have some experts from the Netherlands engaged on that team?
Well, so actually we can also reach out to those from the Netherlands. I think that's a great suggestion, Jeannie. The current plan is to use the modeling team that's doing the Portland's flood protection modeling because they have carriage of our very complex Mike 21 flood model. So they would run these additional models for us.
Yeah.
And Pina, just to clarify, we're working very closely with the Conservation Authority, who's part of that team.
Correct. Yeah, we actually met with TRCA yesterday. We had a really great meeting, and they're really excited to be part of this project and would like to provide us resources to support our team, both from a habitat compensation perspective to help us develop a really solid, progressive fish habitat plan, but also from the flood modeling and flood mitigation perspective.
Thanks.
Okay. Any other questions there? Great presentation, Pina.
Thank you.
Suggest that since we own this land, we do approve this resolution to move it into our strategic plan. Almost own it. Can I have that motion?
I'll move it, Kevin.
Okay.
I'll second.
Thanks. Great. Exciting project. Look forward to it.
Great. Thank you.
Thank you, Pina. Okay, moving right along. Portland's flood protection update.
Thanks, Kevin. So this report is the Q1 2021 construction cost forecast, risk update and quantification. So can we move right into the presentation, page 265, that one, I know. So as you recall, we undertook to conduct estimates on design at 30%, 60%, and 90%, with 90% being completed in November of 2020. From here on, every 6 months, essentially in the first quarter and in the third quarter, we will update the estimates, update the risk register, and update the risk quantification through to the end of the project. And we do this obviously to provide as much comfort and assurity as we can that the project is continuing to proceed on time and on budget. So if we move to the next slide, and I'll just go through very quickly through the next 3 slides, which provide the status of the 3 main parts of the project: earthworks, marine, and parks. Work is proceeding on schedule. Procurements are, I won't say substantially complete, but largely complete, with about 81 million left to tender, and that's largely the finishes on parks, roads, and the river. Next slide. Bridges, essentially fully procured at this stage, all bridges under construction, and bridge finishes are the remaining finishes and furniture, the remaining outstanding elements to be awarded. Those procurements are in process. And next, I know roads and services. Again, finishes, road finishes are remain outstanding, with the majority of the work either procured or in the process of being procured. So we continue to forecast that the project will be completed on budget, $1.185 billion, and on schedule. At this stage, the construction cost estimate has increased by approximately 15 million from the 90% stage gate. That increase is primarily related to some adjustments that we did to utility cost sharing based on negotiations with utilities, as well as increased costs for soil handling, treatment, and disposal. And we'll talk a bit more about that as we move forward. We can pass or just very quickly go by the variance of 14.8 million. So next slide, actually, I know, to the next one there. That's the summary of costs. So we had hydro cost sharing, and then with respect to the earthworks, cost changes to soil treatment, dewatering, and excavation, largely due to the soil treatment and disposal costs. And then some minor, and I'd say fairly immaterial, although 2.5 million in water treatment, for example, costs estimates have been increased based on the current design and the work that's happening on site. Okay, we won't go through the details on contingency, other than to say, if we go to the, I'll keep going, I know. Currently, one more, I think. There we go. Our real-time contingency allocation, so unallocated contingency, is $45.8 million. The contingency balance, you will see that based on the estimate and forecast, we are forecasting utilizing more of that contingency. So if we move to the next slide. Actually, let's talk about the risk register before we do that. So we've increased the costs in the risk register by approximately $20 million. Again, there are a couple of increases or a couple of specific reasons for that. Number one is that over the course of the winter, we did an assessment of the soil treatment efficacy from last summer, and have assessed that there is a risk that we are unable to treat soil to the standards that we originally forecast we'd be able to for reuse. And as a result, we've included a fairly substantial amount of money in the contingency to address soil treatment, additional soil treatment costs, as well as soil disposal and import costs. And then secondly, we have included for the impacts of the very volatile commodities and construction market, and included, in fact, a $25 million contingency in the risk register to account for potential market impacts related to the increased costs of lumber, steel, concrete, and increased labor due to the very robust construction market we find ourselves in. Next. Here is the S-curve. We are now forecasting, or the probability of completing on or below budget is 63%, as compared to 70% at 90% at the 90% stage gate. Again, that reduction is due primarily to the two major risks that we have allocated for in the risk register and contingency. Next. Okay, and here we see that based on the current forecast, we're forecasting an allocated contingency of 34 million. That's in the fourth column, about in the on the white line, and probability of achieving target at about 63%. And I would just note that that number climbs to 75% with the addition of about $6 million in contingency. So it is not a big number that we're dealing with here. The range is actually fairly small, going from 63 to 75%. So as a result of, carry on. As a result of this, we've looked at, and I'll just speak to this, leave this slide here, but we've looked at other opportunities, cost optimizations that I'll talk about very briefly momentarily. From a schedule perspective, currently the risk of not achieving schedule amounts to about 3.1 months, and that's based on a end of December 2023 substantial completion date. I would note that our contribution agreement with the governments provides for a completion date of March 31st, 2024. So even accounting for the risk identified here, we would still be completing the project within the time frame specified and identified by the governments in the contribution agreement. So in the next slide, please. In terms of risks, I mentioned we've added about 25 million for market forces, so that's as cost escalations. And then the next 3 or 4 top risks are related to, just could go back. 3 or 4 top risks are related to soil disposal, so the 9.4, 5.2, 3.2 million dollar risks have been allocated. And then we've got a number of opportunities identified as well, which we hope to be able to take advantage of. From a schedule perspective, the largest risk we have is the potential 3-month delay for the Enbridge gas line, 20-inch gas line, and I'll talk more about that in the closed session. So our next steps, we will finalize this report based on your feedback for the ESC and the Board of Directors. We'll continue to manage the risk issues on a proactive basis, including the Enbridge issue, and continue to explore optimizations, although I would point out that optimizations are becoming less available with every day that construction continues, obviously. Next, Dino. Just a list of some of the optimizations that we have looked at subsequent to the 90% stage gate. I won't go through them all. You have a chance to review them, but we are pursuing some of these. Some of them we've actually implemented already. And then, of course, we've got our list of those items that, should there be contingency available at the end of the project, there are a number of things that we would propose to add back to the project that we have already taken advantage of as optimizations, and that's reduced furniture, reduced fencing in parks, some additional planting and the like. So very quickly, that's the status. And just to repeat, we are still forecasting that we will be on budget. We are still forecasting that we will be on schedule. And as at this point, we think we've covered off the known risks really to a substantial degree. So any questions or comments?
Okay, thanks, David. Any questions here before we go over to BTY?
David, quick question. I'm just curious about the earthworks. So it looked like from your presentation that earthworks is our biggest unknown in terms of 16% of procurement not started, 28%, and another, what percentage was it, in progress? But as a total dollar value, it's about 143 million that we're still unsure about. What's the timing on that so we can get some more certainty and nail down those costs? Because they seem to be one of the biggest risk factors.
So with respect to the 81 million that's outstanding, the engineers, the designers are still completing the issued for tender documents, so they're not quite ready yet. We do expect all of our tenders to be complete by the fall. And in fact, Elliston are forecasting that some of the pricing may improve and are holding back on some of the tenders that aren't explicitly required now. So some of this work may not start until 2023. We would like to get it procured, and we intend to get it procured, well in advance of that, so that we've got 100% of the market risk covered. But it's probably 4 to 6 months before that happens.
Okay. Oh no, that's great. Because I mean, from my calculation, kind of the amount that's untendered is 40% of the total uncommitted in the budget, and total uncommitted is only 30%. So I guess it's seen. If we're going to get some better idea, kind of within the next 6 months, that's great.
Yeah.
Okay, that's great. Let's then go to BTY for their report thereon. Is that Joanne?
Yes, hi, Kevin. This is
Hi.
Joanne from BTY Group. So I'm here to present or give the overview of our report number 11. I'm going to assume that the report has been read, and I'm just going to give you some highlights and ask questions. So in terms of the budget, we can confirm that the estimate at completion is on track for $1.185 billion. That's unchanged. The commitments are approximately 69% this period. The contingency was at 6.3%, and 8 projects are indicated to be over budget, though those are included within the EAC. So everything in terms of budget is tracking in accordance with expectations and in accordance with the budget. In terms of schedule, we have a new baseline schedule this period. What's significant about that is it indicates the current planned construction sequencing and activities. So as a result, the dashboard indicates lots of green lights and low risk items in terms of the scheduled progress. We've had an opportunity to comment on this baseline and the previous iterations to Elliston and Waterfront Toronto. So BTY being involved in that process when we provided them comments on this document. There are some key points that we're tracking related to critical path. We noted that there was a low number of activities which were included on the critical path. That's approximately 5%. The issue with that, and that's just something that we will track on an ongoing basis, the issue with that is there's not many markers to ensure that the project's proceeding in accordance. If a critical path item moves, the actual end date can potentially move. Right now, everything is on schedule. There's some minor delays, but overall, those are not impacting the completion dates. Scope, there are no changes, as David identified at this time. Risks, we've noted that the risk register continues to be updated. We're monitoring the key risks. They're generally consistent with what we're seeing in the marketplace and the broader marketplace. We have risks related to COVID-19, extraordinary escalation in the marketplace, which we're expecting to be a short-term thing, but certainly significant at this time. And there's a busy marketplace, and David's touched on those items and how they're managing them. So I think that's basically the quick summary. So I'm ready for questions.
Okay. Succinct. Thank you, Joanne. Any questions there?
Hi, Joanne.
Hi.
Quick question. Based on what you guys are seeing in other large-scale projects that you're monitoring right now, are there any early warning signals you're seeing in the marketplace, or things that we should make sure that David and his team are aware of?
We've had those discussions with David, and he seems to, they're very aware of all the issues, what we're seeing. What we're seeing in general, though, is just a larger impact of COVID-19 on other projects than what being realised on Waterfront Toronto. And that may be in part because of the procurement model, or probably is in part because of the procurement model that you have in place on Waterfront Toronto. You know, a lot of the projects we see are design build, and so design builders are carrying that risk, and you don't have that exposure at Waterfront Toronto as much.
Yeah, Joanne, if I can add to that, Jeannie, I have regular contact with the deputy for the provincial deputy for infrastructure and with the CEO for Infrastructure Ontario, and we had a discussion around the high escalation in the cost structure, and we are probably one of the best in terms of being insulated compared to others for the reason Joanne and David and others identified. But it is a huge risk right out there on the general infrastructure, and they've brought it to the attention of various governments who are challenged with projects they've approved that have major pressures now. But I give you know, our team and David and our procurement team lots of credit that we've mitigated most of that.
Okay, great. That's good to know, especially since we've approved going ahead with the Parliament slip and the quayside infrastructure.
Yeah, and some of those cost escalations, as Pina said, have been built into the model.
Great, thank you.
Any other questions there? Okay, thanks, Joanne, and thanks for that update. We're a little behind schedule. Borrow some time here on the directors and officers insurance, stealing from your thunder a little bit, Ian. We are going to discuss this at Steve Diamond's request at the full board. Suffice to say that costs are going up, which is on D&O insurance, which is consistent across certainly all the boards I'm involved in. We'll take the document as read. Is there anything that we need to be highlighted on that ahead of a more fulsome discussion with their advisors at the full board?
Kevin, the only thing that I would comment is that while costs are going up, we have successfully been able to maintain our existing coverage. Given that it is a hard market, some insurers are actually withdrawing coverage. So we've been really successful in being able to maintain the same level of coverage that we had last year, albeit at a slightly increased cost. So that is a good news part of the story.
Okay.
I agree.
Okay, didn't mean to cut anybody off there, but let's see if we're a little bit back on time. I guess with that, unless there's other business arising I'm not aware of, can we get a motion to go into closed session?
I'll move it, Kevin, or Michael.
Okay, great. Seconded. Okay, we are now in closed session.
Wait for Ina there.
Yeah. Sorry, Kevin.
You know what? Her headphones not working. Let me.
There you go.
Recording has started. Yeah.
Okay, and Ian, can you remind us which of the resolutions we now have to approve?
It's the resolution to approve the minutes from the closed session. Ino can probably pull it up on the screen. It'll be in your book. There it is.
Can I have that motion? Michael?
Yeah.
Jeannie? Okay. So moved. And others?
That's it.
The only thing you have to do.
Okay.
Yeah,
Did Michael, Jeannie, did you want to have let everybody go and have a short in-camera session with the three of us?
Yeah, sure.
Yeah, we should probably just take a minute.
Okay. Okay, so I'm gonna I'll terminate the meeting. I have a motion to terminate the meeting. Can I get that motion? And we'll just stay on for a few minutes.
Thanks, everybody.
Okay.
Thank you very much, everybody.
Yeah, thank you, staff and everybody else. Thanks. Goodbye. I know we'll miss you. Thanks everybody.
Thanks for everything.
Thank you.